Yo, it's your boy Nate be lit, cause Nate really does be lit. And would you believe I did a whole trade breakdown for this currency pair trade that I'm about to show you guys right now. And it wasn't even effing recording. I bugged out. But anyway, ladies and gents, we are back again with another trade breakdown on USDCAD. The last one was on USDCAD, which is also pretty funny, right? Now, this trade went to like a 1 to 20 or 1 to 16, something like that. So I'm about to break it down to you guys. So let's get into it. Started off on the higher time frame, right? Now, on the higher time frame, straight off the rip, I knew my bias was that I was bearish. Why was I bearish? Well, because from a technical standpoint, we distributed, and this distribution was strong enough to break a previous reaccumulation. Who lives in reaccumulations? Buyers. Who lives in distributions? Sellers. So if the sellers were strong enough to break a previous area where buyers live, that told me everything that I needed to know. And that was that obviously the sellers were in control. And if the sellers were in control, I want to be selling in a seller's market and I want to be buying in a buyer's driven market. Simple as that. And we just based off of what I just showed you, we were in a seller's driven market, right? So I was looking for sales. So going down to the lower time frame, i.e. the daily, what we could see is that we distributed out of a previous supply area, right? A supply being obviously the premium pricing, right? We want to sell in premium. Think about if you own a house, would you want to sell it at premium, or would you want to sell it at a discounted price? For me, I want to sell it at premium price, and the institutions want to do the same thing. So they want to sell high and they want to buy low, right? So at this point, we saw distribution. And what is a distribution? Distribution is evidence that sellers are coming into the markets, right? And a bearish market cycle is a distribution followed by a redistribution, and that's exactly what we saw. Same way that a bullish market cycle is an accumulation followed by a reaccumulation, right? And we can talk about validating those in later videos. We can briefly touch on it on this video even. But price distributed, right? Sellers came in and pushed the market lower out of a previous supply area, meaning that, when we're seeing distributions taking place out of supply, that tells me that sellers are still driving these markets. And especially when we see a redistribution, that just tells me everything I need to know, right? So, the market only, and this is important to understand, the market only wants to do two things. It wants to, right, seek and destroy previous lows. If we're bearish, price wants to seek and destroy previous lows, and it wants to rebalance or retrace or correct to bring price back up to higher prices again, high enough that it's attractive for these institutions to add more sell orders to then seek and destroy the next low, right? And then this just ends up being a whole cycle of price rebalancing and then seeking and destroying, and then retracing, seeking and destroying, retracing, seeking and destroying. Now, we don't trade, lower lows and lower highs. This ain't ICT out here. You get what I'm saying to you, right? But or they're saying, smart money traps and all this other nonsense that I see people trading. Not nonsense that it doesn't work, but it's just nonsense because it's not complete. It's like a apple without the crumble. Do you get what I'm saying to you? So again, distribution followed by redistribution, right? So we've seen that now prices come and obviously sort and destroy. Every time I say seek and destroy, I always think of Modern Warfare 2.
You're a nerd.
Those of you that know. The rest of you guys are too young for that one. But we sort and destroyed. Well, let's even go back. And by the way, you guys can see this beautiful 1 to 40 plus a risk to reward buy on USDCAD. The last trade breakdown was off this, but I forgot to put the screenshot of my MT4. So you guys will see a screenshot of that previous trade, and I'm going to show you one of this one once we get to the entry portion of this, right? So you will see that in 3, 2, 1, boom. Because I know the last one, I watched the video back and I was like, yo, I didn't even add the flipping MT4 thing to it. I don't want people to think this is cap now. You get it? Because I'm not even going for that. That's like me saying, oh, I'm a black man. You lot just know that already. Well, if you know me personally anyway, right? Or if you see me on Instagram or wherever, or if you just watch any of my YouTube videos. But going back to what we were talking about, we sort of destroyed, took out this low. So what's the next thing I'd be anticipating? Retracement, a correction, a rebalancing. So that's the phase that we were in at this point. So just going back for a minute, we've had a distribution. We sort and destroyed these lows, we've rebalanced, right? We sort and destroyed these lows, so I was anticipating a rebalance. So I'm not going to see if we're rebalancing. I'm not going to see the bullish market cycle that's starting to bring us up unless I go to a lower time frame. So that's exactly what I did. So we went from the higher time frame to intraday time frame, right? And what did I start to see? I started to see that we accumulated, after taking out these lows, by the way, right? We accumulated, which is not good enough for me to take a trade off of, because we could have accumulated like how we did and then distributed and then continued going lower. I needed to see not just evidence that buy orders came in once, but that they came in twice, right? And there's different accumulations. Some are driven by buyers, some are driven by sellers. It's a whole different conversation for another video, right? But we started to see evidence of buyers coming in the form of previous profits being taken. We saw an accumulation, we saw a reaccumulation, right? So initially, I was waiting to see if price could come back down into discounted pricing. In a bullish market, discount is 50% and lower, and in the bearish market, it's 50% and above. But obviously, on this low intraday time frame, obviously I was looking for price to come into discount so I could potentially buy it up to the 50% of this previous larger redistribution, so I could look for sales. It will start to make a bit more sense in a minute, right? So again, I saw an accumulation, reaccumulation that tells me we're in a bullish market cycle. However, I was waiting for price to come down here. Price couldn't actually do so. So what I decided to wait for, right, was just for price to reaccumulate again. You know, it's like, let's say you're going on a date with a wicked one and you're meeting her at the restaurant, right? Which you shouldn't be doing. Make sure you book her an Uber, right? And you guys maybe just meet by Uber. Don't be taking trains. 2025, all right? But make sure that you guys, now that's a joke, by the way. Like I was saying, if you're going on a date with a wicked one and you miss the train, what do? You just simply wait for the next train, right? You're not going to throw your toys out of the pram and, no, I'm going home. Do you know what I mean? So I didn't, price didn't come into the previous reaccumulation, so I simply waited for the next reaccumulation, right? Now, when price comes into the 50% of a reaccumulation or below, you want to see evidence that buyers are coming in. You always want to see evidence, right? Before you take a trade. That's how you up your win rate. So let me go to a lower time frame just so you can see the previous reaccumulation a little bit clearer. And how do I validate a reaccumulation? You want to see a distribution, bring price lower, maybe shake out some weak hands, right? People that are buying early, or people that are buying higher highs and higher lows, because usually these guys get wiped out for the real move to occur, right? So we're seeing a distribution. Then I would be waiting to see a accumulation to take out the previous high, right? The previous distribution, because again, who lives in distributions? Sellers. So I want to see sellers coming in to push price lower so that they can bring price low enough that it's attractive for more buy orders to come in, because again, institutions want to buy low and they want to sell high, right? And then at this point, you see the buyers come in, and the buyers, you want to see evidence that they're strong enough to take out the distribution that caused price to come lower. That tells us that buyers are still, there's still a additional buy orders coming into the market. It's so important to see these pieces of evidence before you start taking these trades, right? Otherwise, you're going to be how I used to be. Make some profit, give it all back. Make some profit, give it all back. End up in loss. You can't have a profitable month, profitable week, profitable year. It's long. Yeah? So just listen to what I'm telling you, bro. Just please. Again, we came into the 50%. So that came down to a lower time frame to see the evidence. I wanted to see if we're actually building out an accumulation, right? What is an accumulation? Again, an accumulation is evidence that buyers are coming into the market. So, and we can talk about, validation criteria. Like I said, we can talk about that in depth in another video. I will briefly touch on it now, just so you can see where my thought process was. So I wanted to see evidence that buyers are coming in. So first of all, I wanted to start seeing that we were getting larger retracements than the previous retracement. This was my previous retracement here, hence why I put it in red. And then this was a larger retracement. So this is essentially my phase A, showing me that we're stopping the previous trend, which is obviously bearish, right? Then after that, I want to start to see buy orders coming in. We've seen one set of buy orders, two set of buy orders, three set of buy orders, four set of buy orders down here. Then you want to see a manipulation of the lows so that institutions can add their final set of buy orders. Seeing manipulations is not to wipe out people's stop losses and blah, 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 as you may have been taught before, right? It's so that they can bring, again, what the institutions want to do at the bare bones. This is bare bones economics here. Buy low, sell high, right? So they want to bring prices as low as they can so they can fill in the rest of their, the larger remaining of their buy orders so they can send price higher. So I want to see these buy orders come in. I want to see a manipulation, and I want to see a break of that previous high, which we also saw here as well, right? And at that point, I'm going to measure out, I measured out my final manipulation, and then that will tell me where my entry can be, right? So I had an entry. Initially, I was trying to enter off the 50 with my stop loss below the low. Let me just bring price back to where my actual stop loss was, because this is obviously when I went reduce risk, right? And I'll show you that in a minute. So again, this is where my stop loss initially was, right? So once I saw, a valid accumulation print itself out, obviously I saw the break, which confirmed that the accumulation was complete. Then I was happy to take my entry. So my entry was meant to be here. You're probably asking yourself, hold on a minute, why is my entry up here? Simply because, yeah, fuck it, I was late, right? I saw it late. I saw it late. I'll be honest with you. I'll put my hands up, because the seconds is pretty damn quick, right? So if you're not quick, you can miss a few pips. So by the time I was actually able to actually press the button, and buy and market execute on this trade, price was here. And I was happy to take it here just because the risk to reward is still adequate. At this point, the projected risk to reward was I believe it was a 1 to 26, if I'm not mistaken, or 1 to 27, excuse me. So again, the projected risk to reward was a 1 to 27, and I'll show you where my targets were. My first target was obviously up here, and I went reduce risk at this point. So I went reduce risk here. My first target was here. Let me just step out for a minute. My second target was up here at the 50% of this previous redistribution, and I'll explain why I did that as well in a minute. And then my final target was obviously the 50% of the larger larger redistribution of the reload that directly caused this low to break, the redistribution that directly caused this low to break. Because it was very close to the 50% of the whole redistribution, I just decided to go with this just because it was a little bit more conservative, and because this was actually a counter trend trade. I always want to be conservative. I reduced my risk on this trade as well, and I made sure that my target was, my targets were pretty tight, just so that I could make sure I get out of this trade with something. All of your trades should either end in either a very small loss, a calculated loss, one that was predetermined before we even took the trade, or it should end in break even, or it should end in profit. That's the only three things you should have. You shouldn't have large losses, like uncalculated large losses. That's just stupid. Do you know what I mean? And I say that because in order to be consistent in your results from the market, you have to be consistent with your approach to the market. I cannot stress that enough. That will go over a lot of people's heads, like Virgin Atlantic, right? But hopefully it doesn't. And if it does, feel free to hit me in the comments as well, or just simply find me on Instagram. My Instagram will be plugged in somewhere down here. Shameless little plug for you guys. Wink, wink. Right? So again, right, price obviously came into my entry. I did catch it obviously a little bit late. And if I play this out, you guys will see how this trade actually transpired. Price actually came to test demand twice, right? So it came once, and then you'll see it did it another time. Oh, by the way, just before I continue, right? When price broke this high, I went reduce risk. And what that looks like to me is I simply brought my stop loss just beneath the low, because on the lower time frame at this point, when price kept going high and broke this high, that means that now we've got your distribution, you've got your distribution here, price comes lower, accumulates, and price obviously goes higher. So I don't anticipate price coming any lower than this. That doesn't mean it can't. That means if it does, it just simply invalidates my trade and we continue moving, because obviously we went reduce risk. So had this trade gone against me after that, I wouldn't have lost anything anyway. At this point, I was simply waiting, and eventually price hit my first target, which you'll see now. Bam. So at this point, I took a nice little partial off this. I think it was like 30% or 40%, something like that, around that sort of. I'm gonna have to double check it. But price hit my first target. Cool, I'm happy, right? Now, my second target was obviously this redistribution that obviously sent price lower. Why did I have this as my second target? I had this as my second target because this was the area, this is the next area where price can go against me. People are very fickle, and people think that when they're doing something, it just has to be right. They're not intelligent enough, or they haven't exercised the ability enough to be able to see one side of something and then look at its opposition and say, okay, how can I be wrong? well, how can this be improved? Most people don't have the awareness or even the willingness to do this, and that's why a lot of people fail in these markets as well. So for me, I'm always asking myself, okay, where can price go against me? And this was the most previous area where price could go against me, because it's a redistribution where they're re-adding sell orders into the market. So right now, buyers are pushing this thing up, but when we come into this area, now there's resistance, and that resistance could lead to price coming lower and eventually stopping me out. Hence why it's called a devil's advocate position, which I was shown by my brother, my good friend, Master of Coins. I big him up each and every time. Obviously, price made its way higher. At this point, price just started rocketing. And then eventually, price came to my second target any minute now. Boom, right? So it came to my target, and obviously I'd taken another piece of partials. This paid very nicely, by the way. This was absolutely tantalizing. Yeah, sucking my fingers, kind of tantalizing. But yeah, I was about to pause, but I'm not even doing that no more, I'll be real. Yeah, everyone's starting to get too childish with this pause thing, I'll be real. So yeah, no pause. Someone wanted to tell me something, come tell me something, whatever. Price came to my second target, of course, and obviously I took my, a large pause of partials again. And then obviously I was waiting for the rest of the volume to obviously, I was waiting for price to come up to these highs so I can close out the rest of my volume. However, price just didn't do that, right? It came pretty close from what I remember. And then, unless this was the highest point, did price do another high? Yeah, it did. So price was making its way higher, but obviously we just couldn't do that. And then eventually price ended up stopping me out, which you'll see shortly as well. So what I'm going to do in the meantime, right, whilst this is playing out, I'm going to put the screenshot of the MetaTrader 4, like of the actual trade, in 3, 2, 1. You should see it now, right? So again, just so you guys can see, this is real trades that are being taken. Ain't no fugazi thing out here. So as you can see, obviously price came, stopped me out in the rest of the volume. So I'd taken, like, at this point, I think I'd taken like 70% of the volume off, and I was waiting for the other 30% to come up here, and obviously price just didn't do that. And this is me showing you the reality, bro. Like, please don't allow yourselves to get swindled by these social media gurus and all these people telling you, oh, my 100% win rate, or I never lose, or whatever, right? Oh yeah, hold your trades to full volume. These are just idiots, bro. And I'm qualified to tell you this, bro. They're just fools. Do you see what I'm saying? Because if in this example, had I not taken partials and I tried to hold out to here, I would have been stopped out. Imagine waiting. Well, my entry was down here. Imagine waiting. You've gone 3 days or so, right? You've seen you're in serious profit, and then price comes down and does this, a day later. So you've waited 4 days to get stopped out. If you want to beat me up, do it quick. Do you see what I'm saying? Don't come and let me wait 4 days and then you stop me out. That's just dumb. Only a fool will try and hold full volume, all the way up to their target. Anyone that tells you this, they're lying to you. Don't fall for it. Make sure you're taking partials. Pay yourself. Can't stress it enough. And I struggled with this personally, which is why I'm telling you. I would be that guy trying to get, I'm trying to get everything perfect. I want our price needs to come up exactly to the pip and hit my take profit. Otherwise, I'm not gonna. Fuck all of that. Pay yourself. Take your partials. Predetermine it. Don't just take partials just because inshallah. Do you get what I'm saying to you? Or you're just doing it by hope. Hope is not a proper strategy in these markets, ladies and gents. You have to predetermine these things and be calculated with it. And when price comes to your targets, you take your partials. Simple as that, right? I know I went off on a bit of a tangent here, but I'm saying this stuff because I care, bro. I used to make these silly mistakes. Even sometimes now, I make silly mistakes, not in regards to this, but other things. I'm a human being. I'm not out here telling, oh, I've got 100% win rate. I'm profitable, yes, but I don't ever claim to be the wickedest, baddest trader out there. I'm doing all right. I'm pretty damn good, right? I'm pretty all right, but I make mistakes. I take losses. I have trades that hit break even. This is just the reality of the game, and I'd rather be the guy that's telling you the ups and the downs rather than just telling you the ups, because anyone that's telling you the ups has got a lot to hide. Trust me on that. So the overall risk to reward was a 1 to 27. But it went to 1 to 23. I took the most of my partials at a 1 to, I think it was 17, if I'm not mistaken. 1 to 18. I took my second partials at a 1 to 18. It went to 1 to 23, and then the rest stopped me out. that is the reality of it. So again, I hope you guys got some value from this. I appreciate you guys for watching. Make sure you like, make sure you comment, make sure you subscribe, all of that good stuff. And I'm going to be bringing out a bunch of bangers in the near future as well, all sorts of stuff. So yeah, you lot stay tuned, make sure you subscribe, and I'll see you guys on the other side. Take care. Remember to keep your head on that bread. Peace.